Hello students, today we will learn some of the important points of direct tax in India. Now we all know what is a direct tax. A direct tax is nothing but when the burden of the tax directly relies on the assessee. And indirect tax means we know that when the assessee can shift the burden of tax to someone else. The examples of direct taxes are like taxes on salary, taxes on house property, and the examples of indirect taxes are like the GST, the excise duty, and etc. So we will start now. We will look some of the direct taxes which is levied, means charged by the central government. It was first introduced by Sir John Williamson. In India, the Income Tax Act, which is actually the control of the income tax, passed in 1886. Then again it was amended on 1922, 39, and 47. The income tax is actually paid by different individuals whom are known as the assessees. They are like individual persons, the HUF, the association of persons, the body of individuals, the cooperative societies, the partnership firms, and the companies. Now remember one thing, the companies are known as the corporate body, and apart from the companies, all the others are known as the non-corporate body assessee under Income Tax Act. What is corporation tax? It is an income tax paid by the limited companies which is levied on the profit made by the companies as per the rates given in the Finance Act passed by Parliament annually. So this corporation tax is also known as the corporate tax. We the individuals are paying the income tax. So the corporation tax or the corporate tax is also a part of income tax. It's a kind of income tax which is actually paid by the corporate assessee, means the companies. This corporation tax is actually the major portion of the income tax. If I say the total income tax collected in India is rupees 100, the corporation tax may be 55 to 60%. Now, what is dividend distribution tax or dividend tax? Limited companies in India are required to pay DDT at 15% on the dividend paid by them to the shareholders. This is in addition to the corporate income tax or the corporate tax. So, a company, if he is earning a good number of profit, a good amount of profit, he will pay a higher dividend. So on that profit, on his income, he will pay the corporate income tax or the corporation tax, and the dividend he is paying, he have to pay the DDT or the dividend distribution tax. Now in the previous class, we have learned what this capital gain is. It is a gain or loss which an assessee incurred after selling or transferring his capital asset. This capital gain tax was introduced in 1947. Then once again, it was modified and amended in 1950-56. And this tax is applicable to individual as well as the companies, and it is payable on gain realized from capital assets, maybe short term or long term. Then comes the wealth tax. The wealth tax is imposed on the wealth or assets held by individuals. It is payable at 1% on the net wealth exceeding rupees 30 lakhs. Next comes the gift tax. It was introduced in 1956. Then once again it was abolished in 1999. Then once again it came, and now look at the last point. The gift tax is exempted up to rupees 50,000 per annum from gifts from relatives, parents, and etc. So if anybody is getting a gift amounting to rupees more than 50,000, he is eligible to pay the gift tax. Now we will learn this. When we will learn, we will read the income from other sources. The gift tax is included in income from other sources. Then the estate duty or the inheritance tax or the death duty. The death tax is assumed two major forms. One is called the estate duty, which is levied upon the entire estate left by a deceased or deceased person to his ancestors. The other form is inheritance tax, which is levied on the separate shares of the estate transferred to the beneficiaries. But it was abolished in 16th March 1985. Actually, this estate duty or the inheritance tax or the death duty was introduced at the time of British era. In England, till 1960, the estate duty was a major amount of revenue. Now, what are the direct taxes existing in state level? There is a land revenue. Land revenue was the most important source of revenue to the government. Land revenue is purported to be the state shares on the output from land. Land revenue is abolished in some states, and others the rates varies from state to state. Now, this land revenue is now modified into as the agricultural income or the agricultural tax. But in India, the most of the agricultural income arising from the agricultural land or the land appropriated thereto is exempted from tax to encourage the agricultural income. Now look, that land revenue is now reformed as agricultural income tax, which is defined as a tax on income earned from agricultural or other related activities. No state government has actually passed legislation to tax agricultural incomes. Then comes the professional tax. This is actually paid by the professionals and it is payable annually. Now remember one thing, uh, like the income tax, we all know what is the slab of income tax. Actually, professional tax has a specified table. The state government fixes a specified amount to be paid by each category of professionals. It may be paid into installments. In case of professionals working as a salaried employees, the employer deduct the amount of tax in the two installments from the salary of the employees, and the employer will submit it to the government. So you will have to pay the income tax. Suppose I am a salaried person, whatever income I am getting from the salary, I have to pay the income tax to the government. That is my responsibility. But when I'm getting the salary from my employer, the employer will deduct the professional tax and he will submit the return. He will submit the amount to the state government. So it is not my duty, but that does not mean it is an indirect tax. Here, burden is not shifted. The amount is actually deducted from me or the SSC. So it is a part of the direct tax. Local governments like municipalities, corporations, panchayats levy some direct taxes like house property tax. We have learned what house property is. On that tax, you have to pay the house property tax, like the municipal taxes, the which is paid on the municipal value of a house property. Now, there is some logic behind this income tax or direct taxes. There should be an equity. Direct taxes based on principle of the ability of the taxpayer to pay. They're comparatively just and equitable because people with large income usually have to pay more direct taxes than those who have lower incomes. So there should be equity in the society. It's not like that I am earning rupees 1, I have to pay 10% income tax, and somebody is earning rupees 1 crore, he will pay 10% of the income tax. Yes, the rate is same, but the amount, the person who is getting rupees 1 crore will be different. So there is equity in India on the slab of the income tax. But there should be economy. Direct taxes are mostly progressive. The tax revenue rises without any corresponding addition to cost of the collection. The administrative cost of collecting direct tax is low because the same tax officials who assess a small income or properties can assess large income and the properties. And India from now on means from the last 10 years, the income tax payable is getting easier after the introduction of ITR, income tax return files. Now, anybody who has a PAN number and voter ID card number or other number can create an ID and pay the income tax online. So there is a certainty. There's an element of certainty in the case of direct taxes. The taxpayer knows the amount of tax to be paid at the time of the payment. The government is also fairly certain how much it can receive as tax. So every taxpayer will know his amount, how much he will pay, and how much he is actually eligible to pay, because we all know the income tax slabs are out there. So the taxpayer is certain how much he will pay, and the government is also know the how much amount of tax revenue he is going to collect in every financial year from his population. So there is a certainty from both end, the taxpayer front of view and from the tax gators, the government's front of view. And obviously, there is convenience. Most of the direct taxes are collected at the sources itself. It is convenient for taxpayer to pay. There is elasticity and productivity. Increase of rates of tax can bring in more revenue. A tax also will be more than income tax payers increase. But there are some adverse effects of it. If suddenly the government decided that I will increase the rate of income tax, that will hamper the lower middle class and the lower class of any country. Think from the point of view of the agriculture. We know it's an agro-based economy. So if the government decides now from the now on we will introduce agricultural tax on the agricultural land. So more than 30% of Indian population who is depending on the agro-based economy on the agriculture will get hampered. So automatically the prices of the crops will get increased, and automatically the food circle will get hampered. Means we, the people, the customers who are getting the crops in lower price, getting the rices and wheats in the lower price, it will be higher. There's a less possibility of leakage. The possibility of leakage in the amount collected as direct taxes is rare. The whole amount collected reaches the state treasury. And also the reduction in inequalities. Direct taxes affect the rich and take away a significant portion of their income and wealth. And such collection can be used to raise the income levels of the poor citizens. So, whatever revenue government is earning, that will be distributed, that will be invested in the public properties like the roads, the military, the national highways, the hospitals, and etc. in the state infrastructure. There should be some civic consciousness. Direct taxes arise civic consciousness and their educative value. Taxpayers who pay direct tax naturally take interest in the usage of funds by the government, and such interest in methods of public expenditure, what I was talking, can lead to protest if the public funds are misused or misappropriated. So we the people, the normal people, we have the right to know how much government is expending on the public expenditure. This is our money. It should be used in proper structure. Then there is tracing effect of direct tax. It is possible to trace the effect of direct tax easily because what we know how much we are giving and how much government is investing in which purpose. And if necessary, the adverse effect can be minimized. Now look at some demerits of direct taxes. It is unpopular in nature, obviously. The people will say, so why you will pay the direct tax? Why you will pay the government when you are earning money? So that's a lack of civic. Direct taxes are generally not shifted and they are paid in lump sum for the whole year. As a result, they are painful to the taxpayers. On a particular period of time, suppose like April, May, June, they have to pay a huge amount to the government. Hence, they are unpopular and resisted. They are opposed sometimes with political disturbances, obviously. And there is a possibility of tax evasion too. So people who are avoiding actually the tax by getting some legal way or maybe some illegally. Because we know a direct tax is a tax on honesty. If you are honest, if you're a true citizen of India, you will pay the direct tax. It's not evaded only when the taxpayer is honest, and it can be evaded through fraudulent practices. And obviously, there are some point of inconvenience. Taxpayers have to submit statement of income along with the source of income, thus revealing his private affairs, obviously. And moreover, the payment of lump sum amount at a time may also be conveyed because of the lack of cash, the liquid cash. Then there is some arbitrariness because we will know the advanced tax structure. The tax rates are generally arbitrary because there are no scientific principle to determine them. In the last budget, we have seen there are multiple tax systems in India, which is known as the behavioral taxation. Whims and fancies of tax authorities may cause overestimation and underestimation of taxable capacity, which may hamper the small SSE. There is complexity. Direct tax laws are usually complex with a lot of exemptions procedures. So people have to know, they have to know what is the rate of the income tax, what the government is want, what are the rebates, what are the exemption, what are the allowances. Producing necessary returns and preparing required accounts may necessitate assistance of professionals, accountants, and auditors. There is a possibility of injustice. It is difficult to assess the income of all classes accurately. With more than 130 per population, it is almost impossible for the government to trace every taxable person. And injustice may be done to different citizens of leading to protest. There may be some unsuitable and underdeveloped countries. we're a developing country. So rich people are in the significant minority compared to mass of poor underdeveloped countries. So revenue collection from direct taxes may not be productive and economical. So hope I have cleared some of the doubts regarding the direct tax. If you have any kind of doubt, you can call me, you can contact me. So from now on, thank you.